Scream it to the world today. Let's scream it off the balconies. Why not? All right. Welcome to 929 Sunday session. Last Sunday of the month. They told us this would be the worst month of the year, or historically this is the worst month of the year. Well, we called bull on that one because we made new highs. We're looking at the S&P and it is making new highs. And the NASDAQ isn't, but pretty close. The Dow, I believe, made new highs, and the small caps, of course, they're still far away. I will have a specific video about the indices, and it's pretty important. It's about 5 minutes at the end of today. So Sunday night, some of you go to bed early. That's fine. You can watch it Monday morning before the market opens. It's going to be 5 minutes, and I think I'm going to lay it down. I already have a plan what I'm going to say. And it should be fairly easy to understand. Don't miss it. Let's delve into the 150 tickers we have to cover today. All right, we'll go into alphabetically ordered. The first one is Apple. Sell, sell, sell. No, don't sell, sell, sell. Let's zoom in to see what's going on with Apple. First of all, the whole market is bullish. So if you have any judgment call, lean on the bull side versus the bear side. This is the only one of the few mega caps I would not invest in for the long term. You know my feelings about it. I don't think Tim Cook is doing as great a job as we give him credit. That's putting it nicely. He's got so much potential in this company, and he can't even put out a product on time. They haven't released AI yet. They've announced it 3 times, and it's still not there. I don't know if they released a new OS with it, but I would have heard about it from you guys. Nobody mentioned it, so I'm going to say it's not out yet. The phones are out, but not the actual AI feature, which is pretty silly. That's what Microsoft used to get in hot water for in the 90s, maybe even the 80s. Anyway, vaporware so far. Show us what you got, Timmy. Charts-wise, it has a good solid bounce all the way down to 215, 214. If you lose 214, that's a big if. We're miles away. You open another leg lower, that's about $12 to $17 from there. So let's say the market's hiccup. This one could end up at testing 200-ish. Meanwhile, the upside is the upside. If you take out 233, you can get yourself $5 to $7. You will need a catalyst. You will need help from the media. AbbVie, I don't know what it's doing. I know it's come up on a couple of... Okay. I'm not sure what you're asking here. If you're looking to buy the dip, not for me. Great price action. They stepped up their game, and I don't see the commensurate step up in the results, but there might be something about future results. So study the company. Technically, I think this is a nope. This is not an obvious point of entry. There might be better points of entry. That's the very short-term comments is if you lose 189, you're probably going to lose maybe $7 to $11. Airbnb, definitely no touch for me from a concept. I'm reading more and more stories of horror with Airbnb. Now, technically speaking, that blue box is above where we are. I believe it's going to be a concrete ceiling. You're going to need a lot of good news to cut through all of that concrete. Yes, news does move, and I mean by good news like an improvement on the bottom line. That's the kind of news I'm looking for. Something that moves the needle in the financials. And it's kind of a pretty wonky financial situation. I'm not sure what happened here. So there is improvements quarter over quarter and year over year. But whoa, that is a lot of chart stuff to overcome up there. Let me zoom out a little bit. Yeah. So you can think about it as Head and Shoulder was lost around 140. And it's going to take a lot to overcome it. And when you do, 148, even more. More, like literally more volume. That red line is not anything I drew. That's the heaviest volume spot. Look at it, by far. So how about, what if it loses this yellow, which is a long shot? This will need a market correction for that to break through. If they lose 110, they probably go into the 90s and 80s, high 80s, low 90s. Not a forecast. I'm just telling you what's at stake. Meanwhile, I think it's range bound. The range is wide, but it's range bound. If you're an investor for the super long term, nothing to do. If you're looking to invest in it, I would look into selling puts way below. Like a stock alternative strategy. Accenture, a pretty big move here. Oh, earnings, okay. All right, so now you have all the wicks from the earnings to overcome. If not, it's probably easier to come back into 337 than it is to, say, go to 377. Let's zoom out. Most definitely. Okay, the comments on Airbnb. This one is trying to get back into these. Of course, this is higher, but it's the same concept. These wicks are trying to overcome a bunch of sellers. So if this person, before they bought, asked this person, hey, how'd that work out for you? That person would have told them, oh, it was great. Here, hold my shares. So what I'm saying is, be careful going long into a prior fail. Look for dips into 340-ish. Adobe probably, if somebody here asked these people or these people or these people what happened the last time they bought it. Okay, so I put a letter R up there, and look how perfectly well they worked. If somebody read my letter R and said, okay, let me not buy when Nick puts a letter R, sometimes you get it right, but it's not good behavior. Well, the same as there is a letter R, there is a letter S down here. Anything below 500 is support for now. For now. If you lose 500, you probably will end up at 450, 460. Those are the big numbers. And it's going to take a lot to come out of 560. So if I was in shares, I would sell covered calls aggressively. If I'm looking to buy shares, I wouldn't. I would do a stock replacement strategy and or stock alternative. Synthetic stock is probably a better word for it. Let's talk about it during the live sessions every day. ADM, I don't know the company. It looks like an okay P&L, and it looks like it's stuck in a tight range. So you've got 57 versus 63, and then 66. So 57 will get you retested on these extreme lows from January. And let's assume these don't fail, then the better entry would be a little bit lower. And if those fail, I don't see why, but if they do, I would bail because I don't know how low it goes. Overhead resistance anywhere above 63. 63 through 66 is going to be very difficult. Look how strong this rally was in the strongest market I've ever seen, and they couldn't fill the gap. So support, support, support. Once it's lost, overhead supply. Wow, I mean, what the hell was wrong with people following up there? Holy moly. Golly. That is a big miss on traders. AES. What is this? I don't know that company. Oh, I do have marks. So I do have 2 marks, and it's going into those 2 marks. It's been struggling to get back there. Okay, let's zoom in. So resistance zone and another one above. So this one is doing very well. The breakout from here, let's measure it, $2-ish. Okay, so they could get to 20.6. So if I was long, I would be out like a light. I mean, this is a pretty boring P&L unless you know something about their future and you're an investor for the future. If you're a trader, I'm out. I don't want to know where they're going to stop rallying and turn around. If you're an investor, do your thing. This one, almost similar conversation. They've overcome a prior fail and tested it for footing. So now you can say everything below 5.8 is support, and anything above 6.8 is going to be tough. 7, I would be out completely. So if I'm in any gold company, I'm out. Hi, Peter. If I'm investing in any gold company, I'm out. Why? Because gold has never been higher, and these are companies, they're not actual gold. Let's say the market's correct. This one have a lot to fall. because their price is tied to gold, but not unless the market is doing something else. If anyway, I'm out of gold companies. I wouldn't be in them. I would not be in AMD at all, like at all. And this is a funny one here. So we put an orange line, and I said, I bet it's easier to get to 122 than it is to get to 168. And I was right. It got to both, though. It went to 122 and 120, yeah, 120, 194. And it's getting to the top. So this is the place where if I was long in AMD, I would be out. Technically, you could get to 188. I see it, 185. These wicks are going to be death, technically speaking. We are, how about I tell you 174 is going to be a problem. So 174 is going to be a problem. These are comments that you should write down if you're long AMD, and you should be selling, well, I shouldn't tell you what you do, but if I was holding shares, I would be selling aggressive covered calls to lower my entry price. So AMD is in danger of pulling an Intel over the long term, over the longer term. I think they're getting wiped by a completely different logic of thinking about processing. And if they don't do the shift, we'll see if she's up to it, Lisa Lu. It's not a bad investment. I'm just telling you the price action and how to manage the investment. I don't know this company. 52 should be very difficult to overcome. Anything above 52 is going to be tough. So they are buying dips and making higher high, dip, higher high, dip. Okay, if they make higher high, 52.5, I would be out as a trading comment. As an investment, it's okay to hold, but you should be selling some covered calls. The P&L looks pretty attractive, so it might be a good investment for the long term. All right, okay, I think I'm on a wrong candle here, so I don't confuse people. There we go. Amazon, I would have been out. I told people in the live, in fact, I would have sold extremely aggressive covered calls, maybe even replaced my stock with an alternative strategy, because they don't pay a dividend, do they? Anyway, in other words, you're not missing out on anything by selling your shares. I think Amazon has legacy issues coming up. It's become a Walmart to a degree, and Walmart has become Amazon to a degree. So I wouldn't think of it as the old Amazon anymore. Let's see if this old new guy, I said new guy the other day and somebody took offense to it. Okay, somebody, I don't know his name, the guy that replaced Bezos. Let's see if he's as good a driver of new ideas as Bezos was. I'm sure Bezos is still involved, but this guy is in charge, right? Technically, this is a mountain. This yellow box I drew, the letter R, everything is working out perfectly. So respect it and respect the support below 180, and you'll be good to go. I would do an iron condor on it, but we're starting to go into earnings. I think Tesla and Netflix are the first two, so be careful with that. ANF, I would never invest in this company just because of how volatile the stock is, and it doesn't match the price action doesn't match the fundamentals. Which is a struggle for people that are investing. Now, it is a great trading stock. You see the comments? Investing, not for me. Trading is tradable. I wanted to short it up here, and I missed out. It was very difficult to make money with it, but I knew it would come back down hard, and it did. I think it can come back a lot lower. The X is still in play. How does that happen? If they lose 128 for whatever reason, I think they get to the letter X in a couple of steps. The big line is 123, 121. That's the big line. And the other big line is 160. So they're going to ping pong inside of a wide base until one of them, if you want me to put a visual box to it. Let's put the aqua lines. And I'll make them thick. I think they have a wide range they can ping pong inside before creating some dramatic things. A new high will require you to, I will start thinking new high if they break through the blue box with confidence. And I think if they lose actually the lower third of the blue box, I think they would start being in trouble if they get to here. Actually, more than a third. This will be warning. Okay, enough time on this guy. Okay, I'm short this one just by proxy because somebody said, hey, they're trying to short it. I should read their comments. They did more to it. So I'll read them over today maybe. But never mind, because I bought a put out in time and I sold 2 puts against it. One for this past week, and it died, and I sold another one for next week. And I collected more premium. So now if this week it doesn't fall, I would have more than 30% of my cost basis recovered, so I can gamble a week. You understand? So it's a small short just for fun. I don't know what's going on, but I can't justify this in here, so I'm just jumping on the bandwagon. This here is not an obvious point of entry. Let me zoom out. Did it split or something? Why do I have, no, it didn't. Holy moly. People say, well, it's in a breakout. Okay, but you can't defy the laws of gravity for too long. Look at ANF. You can for a bit, but this looks weak on top. So values, I'll give you one. 130.5, 130.3. If you lose 125.5 before 130.3 is taken out, you're probably going to end up at 122, 123, and then that could start a debacle lower. These candles offer no support. Look how uniform they are. Tell me this is a human doing this. It is not. ARM, the opposite of a lot of companies where this stock deserves where it's at if you think about what it's done for the world. So all this new technology that drives brains is based on their architecture. They don't make anything. They sell ideas, and people build things with their ideas. So if you believe in, say, NVDA, you have to believe in this one and Qualcomm. And technically, this one can come down to 133, 132, maybe even 128. And of course, it can bleed up to 164 if the market goes there. But I would be looking to buy dips if I'm not long already. The alternative for that would be to sell puts to get engaged with the stock. We've done that several times. We bought shares, we sold multiple sets of puts on it. If it flash drops one day because the market is freaking about something and you wanted to get long ARM, you can sell puts below $100 for the end of the year and forget about it. The worst that can happen is that you can be long that stock at 50 or 60. Why not? We did that several times. I don't know this company. Okay, something is about to happen because you have lower highs, higher lows coming into a pinpoint. So the question is it going to be 1280? Is this what you want? A trust ord? Okay, or 1160. I don't know which one of those two. AVGO, everything I said about ARM, I would probably say here. I would buy the dip. If it falls into 158, 160, I would sell puts lower to own shares like we did before. We did that twice already. And let me zoom out and show you the big picture. I'm going to mention something on almost every stock that if something like, if the market's correct, if the market's correct, I don't know who's trying to speak. Can you hear me? Can't hear anyone here. When have we ever heard any of you in here? Oops. 1 second, okay. Okay, never mind. I had a little blip. Skip, I don't know what you mean. Can you hear me? I can see you, I can't hear you. Okay, continuing on, AVGO. I like to buy dips. This P&L looks so good. It's fake. It looks fake. So it's a buy the dip moment. And on the August dip, we sold puts. On the September dip, we sold puts. On the next dip, we'll sell puts. If I don't own shares, those were my entry attempts. If I wanted to get involved with this stock, Because of the low dollar amount, relatively speaking, I can do the stock alternative strategy. Reach out during the live. We'll do that all day, every day. Boeing, a lot of people are tempted to buy the dip, and I don't disagree. I shared some sort of an iron condor. Let's see if it works out. Was that for us or somebody specific? They asked for it. So I don't mind buying the dip. So my problem is, first of all, we saw the move coming, the headline move before it came out. These purple scratches where when somebody said, what's going on with Boeing? I said, I don't know, but I tell you there's a move coming up or down because of how tight it is. So I said the headline will break out and the market will react to it, and it was to the downside. So if I look left, there's plenty of support, but look how wide of a zone it is. So I put the yellow box to say, okay, this is probably the worst case scenario for now. So in the 50s, 150s, 140s, 160s, that's kind of the range it's going to be stuck in. Rallies into 175 are going to be sold. So if that's the case, then I would sell calls up there if I own shares. And if I didn't own shares and I wanted to own shares, I would sell puts in the lower end of that. That's how I would treat it. As far as buying shares now and starting to make money off of them, as an investment, it's not a bad idea, but don't do more than half. I wouldn't do more than half. I don't want to tell you what to do, but I would not do more than half. I would be brave enough to, let's say I wanted to buy 200 shares, I would buy 100 and start selling aggressive puts against them. The stock alternative strategy, I don't want to discuss it out here. We'll discuss it in person. Okay, Baba. I wouldn't touch anything with China stocks. In fact, I think I bought a put in one of the Chinese ETFs, or at least we discussed it. This rally is based on the mother of all bazookas in China. They unleashed a huge QE. Now, nobody's asking why. Just like me asking, why is the Fed so aggressively committing to cutting rates when we are at all-time high everything? We don't have any asset that's of size that is not at all-time highs, and we don't have an unemployment problem yet. And inflation is still not solved yet. I don't know what's going on in China, but it seems similar. Why are they panicking into a QE? Anybody going long any Chinese stocks now for an investment, you are sheep for the market makers. I'm not accusing you of stupidity. I'm just telling you the reality. Look left and tell me what happened to the person that bought these stocks at these levels for the last 5 attempts, maybe 6. It's a wake-up call to anybody that's buying calls here or shares as an investment. Now, the traders among you, fine. I get it. You're a momentum trader. You think you're going to make $10,000 next week. Go for it. It's just not for me. Levels, anything above here has been sold hard. So you should know that. Anything above here is at moment's notice goes away. As far as checking back to the trend line, just draw whatever trend line you want, and that's the risk you have on the downside. Visually, I can tell you 101 through 97, and then if not, 91.5. So I would buy a put diagonal and wait and see if I can make it work. If it works 1 week, then you're golden. Then you can sell another one the next week and another one, and you would have yourself like a November put. And I wouldn't target just BABA. I would do it on an ETF like FXI or Asher or something. Baidu, everything I said about BABA, also here. Let's see, when was it? That's even worse. Okay, look at all the sellers that are spread out through 120. This might have a pretty good solid P&L. But technically speaking, from a charting perspective, anything above 112 is going to be very, very difficult. So how close to 112 are you from an investment perspective? I do have a friend that was buried in it. I sure hope he took my advice to get out up here. Are you listening? Okay, I'm talking to you, friend. You know who you are. Beto. I would not buy Beto here. Now, this represents Bitcoin to a degree. It is not an alternative to Bitcoin. Now, the good thing about it, if you sold puts with me a few weeks ago and you made money, you weren't assigned, we want to repeat it, or just own the shares for the long term. So if somebody buys 100 out of 1,000 shares they want to own, you can buy it at any point in time. Now, they don't commit to paying dividends, but when they do, it's massive. And if you bought it the first time at the price I said to buy it at, which was way below here, you now own it free and clear Free and clear. They paid you enough dividend to cover the whole price of it. So all your stock are free. You can sell covered calls against them whenever there's a huge rally. But to just buy and say, okay, I'm going to go from here to 30, you could, but don't go all in. I like it. I would build a portfolio of it. It's a low dollar thing that pays a lot of dividend, fixed income, but it's not guaranteed. So here's the path that I think might happen. A little bit more upside, and then you might go, whoosh. Be ready to jump in on the whooshes. BLBD, Bluebird. Is that biotech or pharma? School buses. That was way off. Okay, school buses. All right, let's see here. That was hilarious. And pretty tricky technical. Let's go to weekly. I want to make sure I see a monthly. All-time high zones. Okay. Buyers below 44. Better buyers below 40. Shorter term buyers at 44.5, I can see. And these are strong buyers with the long wicks. Anything below 44, they're buying. And conversely, you have hard sellers. I'll give you values, 51 and 52.7 resistance. Bristol Myers, I know what they do. Technically, it's a descending channel that they're trying to snap out of. And they may have made some progress. So the next dip should stay above 46 to not give up that progress. If they dip down to 46 and come back and beat 52, they can probably get to 60. What they want really is to beat 54. You see that from anything below 56 through 48 is very difficult, and that's what they're tackling. And if you just do it with a little bit of ascending channel as opposed to these, you can deal with it. The good news is that everything below 44 is now established floor. We don't want to talk about losing 40 because it'd be devastating. I just shorted the stock. Simply stated, that red W is a bearish harmonic, and I'm saying, okay, there might be some downside more than upside. I'm risking something because we're going into banks. Okay, so 5% GDP in China. I remember when the market would crash, if we knew that China growth would drop to 7 or 6, below 7, it was like, oh my gosh. Talking about the Chinese conversation earlier. We had the US market correct hard because China was the growth engine for the world. And the question was like, what if the China growth reports, their GDP would drop to below 7% growth because we were in the 12s and 14s, and now they're pouring all this QE to get back to 5. Just think about that. That wasn't too long ago. Okay, 144 is a good base. 148 is a decent base if it gets there. I'm short. I forgot how I shorted it. Probably through a put diagonal. I don't remember. Maybe a sold. I think a combination of a sold call spread out to December and a put diagonal. Citigroup. Banks are going into earnings. I wouldn't do anything with the banks. What the hell is this? Just what the hell is this in one day? No earnings, no nothing. Citigroup goes from 60 to 56. Okay. So how about I say this? If it doesn't get out above 64.5, it's going through that wick in the next few weeks. Banks are getting all the advantages from the governments. So they're basically getting free money, and Powell is trying to help them out. He tried to break them when he was raising rates. He broke a few, and he's trying to make it up to them now. It's hard to compete. It's hard to argue with their bottom line. Okay, they're just creating money out of thin air. Plus some money, it's paper money because they put loan loss reserves or something like that. And then they say, oh, look, we just beat by $2 billion because they're allowed to take off some of those loan loss reserves. I'm just making a point that you can't argue with their fundamentals, but you can trade their charts. Anything into the letter R is difficult, and they're just coming into it. It's shortable at 64 and 65. And when I say shortable, I never mean short the stock outright. I mean put in a bearish position with calls and puts. Okay. Not an obvious entry point. It's the middle of the range. from an investment perspective, if you own it, enjoy it. If not, I don't think this is a beautiful entry point. It could get to 66 though. Caterpillar, I'm going to say it again, I'm short, but via a December bear call spread, so I don't need a drop. I just need it to slow down from rising. Awesome company. I had a rule to never short it, but somebody asked and I said, this is how I would short it. That red W is bearish, but when I drew it, I said maybe it drops from here, vulnerable, or better yet, from there. So I have 2 shorting points, and my short is above here. So I took the chicken way out of it. I'm short, but I don't need a drop. So it could hang out here, get a little bit higher, a lot of bit higher, and I'd still be okay. Beast of a company. CCJ, great run, great timing from Raghu. I believe, well, he had some rough patches, but he managed through it and updated us. This here is not a good starting point from a chart perspective. Look at it. We have a range. We're right in the middle of the range coming up with super speed. This is copper, I believe. Maybe. Anyway, oh, uranium. So now talks of nuclear energy, this and that. So think about it as gold. Trades in the same mentality. People are in it for a beautiful future. And a lot of it is not here, not now. But not an obvious entry point. Put it on your to-do list to get more for the long term. And it is an investment because if you think about it, we need nuclear energy. CCL, I believe they're going into earnings, so I'm not sure why you're asking me today. It's doing exactly what I said it would do. And you're going to need to throttle the entries here because it's inside this bowl, and it is going to probably struggle with this. Now, all this is out the window because we have earnings. Talk to me tomorrow on the live. We'll look at the options. Maybe there are some clues. I'm going to pause this for a second. One moment, please. Okay, I'm back. Sorry, I'm here trying to manage the household. It's empty, and I got to pause to go take care of the dog. He's barking up a storm. Okay, CEG. What is this? Constellation Energy. Is it nuclear? Renewable products, energy solutions. Okay, so clearly there's probably expectations of future benefits because on the face of it, nothing is good here any better than a month ago, and the price action is pretty big. Let's see here. Wow, okay. So all-time highs. I don't know what to say. Who's asking here? Are you looking to short it? I mean, you could from a red W perspective, which is a harmonic. If you are shorting, just make sure it's manageable way to short. Let's see, I sold the credit call spread, the finance part of November puts. Oh, 3 Mile. Oh, you guys weren't kidding when you mentioned 3 Mile Island. Oh my gosh. Okay, so be careful with that short. I mean, it's still manageable. Reach out to me, Aaron, during the live. Okay, don't let it get out of control. Celgene, not Celgene, Celsius. So I thought it would hit a floor and get bought out, but I knew that it would be a range. So I said, okay, if you want to get long, you sell a put spread to get assigned. And if you got assigned, but I said very specifically, it would be half of a position. So if I'm in that half of a position, I am not adding here just to see if the market's correct. If the market's correct, this one could be much lower, and that's when I will add. And what if it doesn't correct? Then you didn't need to add because then it could meander back up to your price. Hopefully you've been selling covered calls. So the strategy wasn't perfect, but it wasn't bad. It was half of a position, and the break even was in the high 30s, I think, with the opportunity to add double the trade, but not yet. So I wouldn't add here, because if you didn't need to add, you didn't need to add. And if you needed to add, then you add them lower. So if that's what you're asking, it's inside of a very wide support zone, and fundamentals look pretty good. If you look down right, there's no disaster. It's just expectations of price action. If you wanted to go long for the long term, you just take a starter position. Same logic. You start here and you go lower. Charter Communications, I don't really understand their business, but it looks pretty good. Okay, I should say, no alarms. Very wide range, like Boeing, and the range is tightening. So if you look at it, you have this coming into a point. So something is going to happen from here. Okay, so we'll see. Let's narrow it down. Descending channel, shorter term. You see it? You got to respect it. Now it's hitting a baseline. So maybe this is the curl. These are all maybes, right? We're discussing what's going on here. So perspectives is this area needs to be broken to get to here. Don't know if that's easy. The easy thing to do is to line up a credit put spread to start a long maybe with it, buy a debit call spread, a longer term purchase. So this way you're catching the falling knife with kid gloves. If you're looking to short it, you can short against this set of candles. So anything above 350 should be a struggle. Chewy, you misspelled the ticker. Good thing I caught it. This is a stock I would not touch up here. No, I'm kidding. Actually, I would caution you against it because Wall Street sometimes hates it. We were long Chewy on the way down in 2022, and it was a bear to get out of. We won, but it was a freaking struggle. And now everybody loves it. Look left, no way in hell I would touch it here as an investment. For starters, they gave you the concrete ceiling right there. And this ain't no Amazon. Amazon did one of these and they took it out within a month. This is a gigantic tick right there. Everything inside this tick should be sell, 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 sell. That's all of these people stuck. They got unstuck here. Now there's a new batch of people stuck. If I was long Chewy and I got this tick, I would be out like a light. Now it might come up here, but markets have never been higher and you're trying to get up there. It's a good trend. If you want to own it for the super long term, fine. I'm fine with it. If you want to sell puts to own it, that's even better. You should know that I would not be holding calls. Clover, I got you in at 80 cents in this stock. I'm out. I physically bought shares. I said don't buy calls because it's silly. It's under $1. The price of the share is the price of an option. I don't know anything about the business. The only reason I bought it is to say it's not fake. People accuse it of being fake. I said it does business with the U.S. government and it has billions of dollars in revenues. It's not fake. That was my premise. Up here, I don't know what it's worth. Okay, so I most definitely am not in this one. Put yourself a note to go long whenever it comes down below $1. So I'll put an alert here. I wouldn't even have it in my watch list unless you know the company. Now, if you were trading it actively, don't lose 250. You're going to 2, and I don't think you can get out of 330 anytime soon. CLS, not an obvious point of entry. The whole zone above 54 has been a selling spot for a long time. And conversely, exactly the same opposite comments is below 45. So you've got a nice area to ping pong. If you're trading it actively, I would get long into 46 or 44, and I would exit up here approaching 52. If it's an investment for the long term, just own it. Comcast, not an obvious point of entry for Comcast. Look left, and you see. How about I say it differently? Look at that good forecast right back there. Oh, that box, resistance. There you go. It was there. We're in it. And then there's a box above it and a box above it. Anything above here is resistance. Look left. All these jaggedy things make it so the first range of resistance is 44 through 41. And then a bigger one is this one. and then another one confirmed. So it should be difficult to come out of here without real catalyst news. Meanwhile, anything below 40 should be solid. So the next time we have a correction in the market, sell puts or put spreads. Chipotle, we went long on the stupid drop on a CEO leaving. If you know, and now I've run multiple companies before, so I know the worth of a CEO and a CFO. If the CEO is as good as this guy is because of what we saw happen to Starbucks, he went to Starbucks and immediately got in hot water on Starbucks, by the way. If he's as good as the reaction in Starbucks, don't you think he would have left a good structure behind him? Anybody that panic sold out of Chipotle, you need a lesson in fundamentals and how to run a company and all of that. What did we do? We panic sold people. Hey, you want to put? Here you go, here you go, here you go. And we made money like overnight. The company's fine. I've analyzed restaurants for a long time. They turn comp sales, they turn comps like you wouldn't believe. So give it a run rate. Now, would I go long here? Hell no. I don't want to find out how good the company is without this CEO for the long term. But I knew it wasn't a down 12% reaction. So I'm not involved in investing in Chipotle. And if I am owning Chipotle, I would sell aggressive covered calls against the shares I own or against the calls I own. Great restaurant. Wait until you see a couple of quarters without this guy and see if there's any changes in the metrics that they deliver. Comp sales is their asset. Listen, I said it before when they had a bad burrito. The reason why it's overpriced as a restaurant is because of their sales growth, comp sales growth. When they couldn't grow comps and they were shrinking in comps because people were afraid to eat there, they lost their asset, right? So I know it's a stupid statement, but it's true. The minute you start seeing comp sales without a bad burrito headline drop or slowdown in the growth, then that's a warning sign. This is not the same Chipotle without the guy that left. Coin, I would be out. If you're in it because the rally in Bitcoin, just trade Bitcoin. This is like gold stocks versus gold, Bitcoin stocks versus Bitcoin. So pretty wild P&L. You're going to have to study the company beyond the financial prints. And quite frankly, I'm not ready for it. Why do I need to? I'll tell you why I wouldn't need to. If this one is rallying, 100% Bitcoin prices are rallying. I don't think there's a scenario where this is rallying and Bitcoin is falling. Why bother? Put P&L stuff on your risk. It's cheaper to buy Bitcoin. And you don't have to buy a full Bitcoin. You can use ETFs. Beta would be better than this one. Okay, so if you lose the white line, you're going to do these arrows. And by the way, they haven't undone it. They lost the white line, and now they're trying to recover it. This is not recovered. How about I say it differently? If it's not out of 215, it's in danger of going to 115. This is a real statement. If it's not above 215, it's still in danger to get to 115 or lower. Okay, so down here is not out of the question. Look at it. So let's give you the visual. The last time it rallied this much, it went to here. I'll leave it there. You're saying, oh, that's not going to happen. Okay, let's do this. How about we do this? Are you convinced? Let's do this and walk away and see what happens. It is not a long here. Costco. We discussed this a lot this week. This was fun. We did two iron butterflies, and they didn't lose money. And if you did this one, you made money. That's the trading part. Awesome company. They print money, literally, and they have a great business going. So even if they drop to 840, it would still be a bullish scenario, higher lows and higher highs. So if I copied and pasted the price action, you'll see how it's like these ascending hooks, upside down hooks. Those have a name, by the way, like an ascending inverted scallop or something like that. So as long as this dip doesn't go beyond halfway of that, assume another one can form. So it's a buy the dip stock. If the market's correct, this one has a lot to give back just from a chart perspective. Until then, so I don't see a problem with this one, like a major problem, until we crash in the markets. And this is how it would happen. It would drop into 800, bounce, and not be able to beat, say, 860 and lose 800 again. It will go to the 700 or lower. But that's over months, and you need a bearish market, which we don't have. So it is a buy the dip as a trading and wait for a better entry as an investing, unless you know how to use options like we do. Then you can surgically enter yourself into a long-term position that you can start it at any point in time. But if you're looking to buy 100 shares, this is not it. I don't know what this one is. United States, what? Copper. Okay. Everything I said about gold applies here. It's looking like it's in a spot where it's going to be difficult, but buy the dip and you can carve yourself an inverse cup and handle attempt. So buy the dip in this one, in 227. CRM, great company, not an obvious entry point just because it's entering a place where it's failed before. But the good news is that it's breaking out of a place where it's failed before. So it beat this candle, which is monumental effort, by the way. So now it would be great if it comes back down and solidifies 260 as a base in order to make a higher high. Great P&L, good leadership. They invented the cloud, by the way. They convinced every company that a subscription model is better than anything. This is it. This is the mother of all cloud businesses. Microsoft, all these big guys that sell services now, Adobe, Intuit, QuickBooks, whoever does that, yeah, that's Intuit. All of these companies owe this company their business model. Nobody sells software anymore. They sell service as a software, right? This is where it came from. Is the tiny company that beat Microsoft at its own game with its CRM. This is it. So respect it. Buy the dip, yes. Where I would level it is 258 or lower, shorter term. I don't know what this is. It's probably a wrong ticker. We'll skip it. Cisco. Go along with everything. No, don't. This is not an obvious. This is a nope, not an obvious point of entry. Between here and 55 is an exit zone. Get in closer to 50. CVS, I wouldn't touch it. I don't understand it. Why is it falling off a cliff? I don't know what's going on here. I honestly don't know what's going on. So I would stay away from it. It's falling off a cliff, and you look at the P&L, there's hardly ever a change. So now are they going to bring it back to 70? If I'm stuck, I would sell aggressive calls to get me out for a loss. That's how badly I would want out of it. If you know what's going on, then trade that. Technically, you're going into a death zone, anything above 64. So let's say I bought the shares at 70. I would sell a 66 call aggressive at the risk of getting called away for a loss. But this way, I'm like trying to lower my cost basis to where we are right now because I don't know what the hell's going on. Think about it. Markets have never been higher, and the stock cannot find a floor. It finally did, but who knows? Okay, Caesars, going into a prior fail zone, anything above 43 to 46 should be very, 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 very difficult. If you look left, you need a headline to bust through all of this. So buy the dip, yes. If you bought the dip, perfect. You can just stay in it, put them to work if you know how. If you're stuck from 44, I would cut my position in half. Because if it then dips, then I would get to double my position down in the 36 area. That's how I would do it. Look at it. Look left and ask these people, hey, what happened the last time you bought your shares? We discussed this in the live room yesterday, I believe. Somebody asked, what about Dallas, Delta Airline? Not for me. This is an incredible rally on what? Earnings? Did they deliver? Oh, earnings are up in 11 days. I would be out like a light. If I went long for a trade and I'm still wondering if I should book my trades, book with confidence. And if you want, leave a runner all the way up to 60. Otherwise, you should find extreme sellers at 56. We'll see what happens. Look left. That's what happened. So the good news, if you break out of 60 or 54, let them break out. I wouldn't go long here. Oh, there we go. The letter R. 56.8 should be death. So if they come up to here, and you say, ah, dang it, I missed it. Nick told me not to. Buy it. Whoopsies. What happened? We went. Okay, I forgot what time frame we were on. Buy it on the dip after the breakout. I promise. Seriously, what happened? We went to like that twilight zone. Let's do it this way. I must have changed the time frame on something. 2, 1, 30, 15. No, I didn't. Very bizarre. Anyway, you got the point? Okay. That's so bizarre. Datadog. Wow, I can't explain it. Now my letter Alt-R doesn't work. Let's see. Alt-R working. Okay. That's how you know we're live. Okay, so I put this blue box here. I forget why, but we're at the edge of it. We're struggling with it. So you have sellers at 120. You have another set of sellers at 128. If you take out last week's high, you might have an opportunity to hit 128, and that would be an exit for me. Or buy the next dip with confidence. Look at the P&L. This thing is legit. So it's in a buy the dip mode, yes. Buy calls here, no. Buy a call complicated thing, yes. Sell puts to buy calls, yes. Why? Look at this the box. It says support. So chances are it's now resistance. So if I move it forward to here, I would say this is potential sellers because they were buyers, and now they're probably going to say, get me out, I got stuck and I can't get out. And meanwhile, we kind of forecasted the dip, right? We said resistance, they went above. First of all, they fell, and then they went above, and then they came back to the goal that we thought that they would touch. So look how wide the range is, and we're right in the middle of the range. Sell puts to buy shares. That would be what I would do. Dollar General, I wouldn't touch that whole thing. There's nothing that costs $1 in the US. You can't have a company business that centers around being $1. That's my opinion. They're stuck in this no man's land. You go in there, there's nothing for $1. So I don't know what's the deal there. I don't think they come back to 117 or 120 ever. And if they do, it's a sell, sell, sell. So if you're stuck long from 100, the closer to 100 would be an exit point, or start selling aggressive calls at the risk of getting, with my risk profile, I would say, oh my gosh, I bought it for 120. Let me sell 100 calls at the risk of getting called away for a loss. If I can, I wouldn't double down. Disney, buy the dip worked. They're punching through resistance. That's because it's a great company with great assets, and it has a solid fundamentals. And don't fall to narratives from social media. They're not doing you a favor, okay? They're not doing you a favor. Do your own research. One second. Okay. Look left. We have a collection of sellers that might want to exit here. So it's a buy the dip, shorter term, as an investment. It's not an emergency to go long. I mean, you can just don't go all in. Just don't go all in. Devon, I wouldn't touch it. They're selling rallies, and 40 is a sell zone. 40.5 is definitely a sell zone. You might revisit the lows, although they look like wicks. So let's zoom out. Yeah, not for me. You might drift lower, closer to 30, 31. I don't like these. So anything below 34 would be more attractive than here. They're selling rallies. You just want to see if they're going to repeat that rally sold lower low. Just copy paste, right? So from here to here. What if it happens? Whoops. What if it happens again? This is a solid. This is a weekly, so it's like a very slow paced rally and sold. It's not a bad hold. Oh, with that, video 1 is over. We will go into video 2 in a minute. In case you're watching this for the first time, we break this session into 3 recorded videos for people who can't be here. All right, video 2 of 3 on 9/29. This is our last session in September. You know, the worst month of the year. When we broke records, I'm being sarcastic. Okay, giant gap, Dexcom. So I gave people homework. Nobody came back with an answer. I said, if there is no change in the fundamental thesis of this company's, business, this was a blind buy the dip moment. And I marked 3 times where price to sales was 11, and look at the rally that ensued. This time it's 7, so it's even cheaper from a growth perspective. It is a growth story. Even on the quarterly, it's not so bad. So it's a buy the dip moment. So if somebody bought half their shares on this dip, you did right, and you still have that opportunity. So this is an aggressive sell a put to own shares. 50%. Let's say I wanted to own 500 shares of this company over the long term. I would sell 200 puts, 2 puts, like with extreme confidence every week until I get assigned. And then I would own shares for the long term, only not even half of a position. So I would have the opportunity to double it and then some. That would be my strategy with this one. Or just buy half your shares and sell covered calls against them right away. ELF looks like it's solid base, but my apprehension is that it rallied so far beyond its like what's normal that there might be some more sellers on rallies. So good investment starting position. It's on my list of things to do. I would comfortably sell puts to own shares below. Everything I said at Dexcom is the same. Here, I would say rallies into 138 and 140 is going to be met with a lot of sellers. Now, notice what's on my screen. Credit, the word credit. Okay, so that was a trade setup. Credit call spread to short it up here with a debit put spread out in time. So if somebody did these 2 positions, they made money out of thin air because this money paid for that one and that one paid fully. So now we do the opposite, credit put spread with a debit call spread kind of a scenario because it's fallen into a base. So now you would do a credit put spread and then add to it a debit call spread. Avoid earnings. So this one will be 35 days tops, and this one will be 50 days-ish. The opposite of this. End phase, I wouldn't touch it at all. Someone explained to me how you can lose this much sales and nobody's worried. So if you can answer that question, go for it. I traded it long on the way down, and I said it's a no touch anymore because the earnings report reaction was positive, and they had lost 57% of their sales year over year. If you can't explain that logically and say you don't understand, Nick, because of A, B, C, D, I wouldn't touch this company. Solar had its moment. It had all the advantages from the government, and they still can't make it like a thing. I have solar. I love it, but I live in California, and I don't have hail, so I don't understand this. That's very weird. FCX, this is an exit point, not an entry point. Look at it. Does this inspire starting points? No. And if you can't book profits from rallying from here to here, if you're a trader, I don't know what to say. This here is an NOPE, not an obvious point of entry. Nope. As an investment, you freaking missed it. Buy the next dip. FSLY. So Fastly, we used to trade it, not anymore. You see all these blue lines? As you approach them, these are going to be concrete descending falling walls. Support zone, nope. That's going to be resistance zone now because that's how it works. Prior support becomes forward resistance. Look at it. They needed to hold 12 and they didn't. Now, this was a buy shares and hold if you believed in the company. Sell puts if there was premium. I don't know if there is. If you still want to go long, I would implore you to only take half of a position or sell puts every week to get assigned your shares. And just like Beto comments, make sure you have 31 days until the earnings. So this shows you why it's not an emergency. If you waited, if you didn't buy it at 5.6, you shouldn't panic buy it at 8. Just buy the next dip, split the difference, 6.8, 6.7. Futu, same comments. Now you love it? I don't know what they do. Wow, this is a pretty good P&L. Is this a trading business? So fintech. Okay, so this is like PayPal and stuff. Yeah. Good job if you stuck with it. That's a solid P&L. If it's not based in the US, I would avoid this. This is just too good. Hong Kong. Find out if this is audited from non-Hong Kong companies. I'm not saying they cheat in Hong Kong, but that's just too perfect. Technically speaking, this area is resistance from here on to 112. But amazing P&L, good trend. Buy the next dip. Look at it. Every rally dips. So how about we do this? Let's take the judgment of is it real or not, and do this. Okay? Watch. Spike, spike, spike. Let's just do that. Okay. Does this show up on all time frames? No. Why not? Everything else shows up on all time frames. Why does this not translate from this time frame to this time frame? Okay, I would buy the dip in this one. I would not touch it up here. GE, all in. I'm all in. No, I just shorted it actually. Actually, I've been short. I sold calls way out to December, and they're still working. But I think I added a layer of put spreads. I can't remember exactly what. My beef with it is that it's going up against decades worth of resistance. So it's not a line in the sand. This thing is from 2008 and 2000 levels. So clearly the machines, the people now trading, they look left and they say, ooh, it's a breakout all-time high. The bears are in trouble. Well, the bears have been shellacked, but I still made money on it by selling calls and not buying puts anymore. This will have a crash. I'm confident. It's just a matter of time. Now, don't follow me into this by shorting it outright. I sold calls way up, and just look at this. What this company is now. GE has been running on slicing off things, so they call it streamlining the business. Basically, it's shrinking to grow, but it's still shrinking. So the valuation is through the roof, I think, and maybe better said, the expectations are through the roof. I don't think I'm smart enough to evaluate it because I really don't know what's left. How do you justify this cut in sales? My experience is when you carve out a company, you carve out everything by hindsight. So the P&Ls that are shown here don't show any old businesses that don't belong in this business. So how do you justify a drop of 40% in sales and not be worried about it for the future? So just like Micron, I put it in the penalty box. With Micron, I had the same beef, and I said, the expectations may be outgrown, overblown. That's what I'm saying here. The expectations may be overblown, so it is a good short attempt. So easy to say, I would not be long GE here. GE Healthcare. You see this one is a clean P&L because it has nothing but the healthcare part. I don't short it, although it is shortable. This could be at 85 or 86 in the next couple of weeks. If it's not, then it's at 104. Play whichever side you want. Technically speaking, I would word it, if they don't get up to 96, it's easier to get to 85. Fair enough? If it's not up at 96 or 7, it's easier to get to 85. In fact, if it does get up there, so this is going to do this. If not, it's going to pop and drop. So if you wanted to go long, wait for a dip. You either catch it here or you catch it here. Either way, you pay less than what you're paying now for a call. GEV, holy cow. So if you're the same person giving me all three GE tickers, why don't you just buy everything if you're looking to go long? I mean, I don't know what to say. This one I know nothing about. What is GEV? What does it do? Services generate, transfer, convert, and store electricity. Oh, alternative power. So yeah, this one is a black box to me. Do what you want. The chart says don't touch me, but you look left, there's nothing there. So I have no reference points. How about I say, if I'm an investor, wait for a dip. It's not coming, Nick. Okay, then buy it. What am I to say? Buy half of it, and if it gets cut down to 192, then you add the second half maybe. It's not for me. Yeah, I don't know anything about windmills, so do your homework on that one and see how much the price to sales are or something like that. Gold. Did you mean gold? Or what gold did you mean? You probably meant Barrick Gold. I would be out of every gold company. Great company to buy on the dip. We had it on our buy to dip multiple times. Gold has never been higher. This one is nowhere near where it's never been higher, so it's not for me. It's the same reason why I don't pile into MSTR. Gold is in a breakout mode, and it's probably going to drift lower just from a chart perspective. Over time, gold will be higher. Why isn't this one at its all-time highs? It's trying to break out and get to 23, so if you want to ride that, fine. Otherwise, buy the dip into 19. Okay, now I lost my place. I have to go hunt it. 1 second. Alphabet. I don't like how it's trading. We did it perfectly. Look at the white lines. You can't get a more perfect forecast, right? Okay, so I have a lot of lines here. Let me verbalize them for you. They lost a neckline. They're trying to recover. In fact, they lost 2 necklines. And listen to the English words here. First neckline they lost is up here, and they're trying to recover it. So losing 172 gave you a target of this. This neckline was satisfied completely here. Now they've lost this one, and they're trying to recover. Losing this one gives you a target of this one, which is the most heavily traded level for a year. So in the reality, this is targeting below 140, 136 to be exact. Okay, they can erase that by getting up to 176. So the way I would word it, as long as they're below 176, there's a scenario that takes it to the high 130s. I'll say it again. As long as they're below 176, there's a scenario that takes them down to the high 130s. We're going into an earnings season. Their earnings are going to be solid. It's an amazing company. There's probably a buy the dip moment inside that. This rally of late is super strong, but it's trying to play catch up. Markets are at all-time highs. This one isn't. So that's the catch-up trade. Above 169, you could get a burst that gets you to 184. And that's how you get above 176. So you need a strong push above August's highs. That's the statement there. I would not like to own calls. Shares are fine. I would sell covered calls against them. Let me show you the lines in here. This, by the way, is going to be part of the video on Sunday. We have the struggles in the Middle East, where I'm from, are not the same as the usual. They're not the same as the usual. I get news directly from the Middle East, and every news bit has at least 6 to 8 nations mentioned in it. That is not the normal scuffles, okay? Side comments. All right. Halliburton, this is not it. That happens every time. Halliburton. What's going on? That was weird. What the heck was that? Okay. Short-term comments, 29 to 29.40. Super strong sellers. You need to take out 30.8 in order to avoid it. Let's zoom back out. What is going on with Halliburton? Data feed. Okay, so we're going to stick with that time frame. I'll zoom out this way. Yeah, they're selling rallies. Just copy paste. You'll see what I mean, right? So rally from here to here. Whoops. So the rally from here, the path from the dip to the rally down the lower. Has that happened before? Yes. So maybe it's happening again. We'll put it this way. So what I'm saying is the next rally, doubt it. Trade accordingly. I'm going to have to go back down. Those tickers that are weird, if I scroll down, it loses it because it's not the ticker we were on. Okay. Honeywell, great company. It's global. It's industrial. The industrials had the mother of all rallies this week. What is going on with TradingView? I'm locked up. I can't do anything. Okay. So I'm stuck in one time frame. That sucks. This here is not an obvious entry point. Between here and 213 is an exit point for me. Rebuy on a dip at 204 or lower. So it's not out of the if the market's correct, this one can be at 188. But the things that will require it for it to be there is a full-blown correction in the market, like the August and September dips that don't get bought out in 3 days. So the industrial had an amazing week. Let's see if they can follow through. Otherwise, buy the dip to 203 or 200, or better yet, sell puts to own it below 200 with confidence. Solid company, nothing against it. Humana, I believe we bought the dip, and that's as much as I know about it. I don't trade it. I will never trade it again. The options are super illiquid. We just sold a put spread, and it's just taking... Okay, so when I sold the put spread, I positioned it down here, and I drew this box, and I told you we were here, and I told you there's a chance it's going to come down to the bottom of the box. I literally said that if you were in the live room, and look what happened. So if somebody panicked here, they didn't read my note, and they took a loss and say, oh, this trade sucks, Nick. No, because you didn't read the notes. I totally knew that we would be there. And it's like, why didn't you wait? Because we can't be perfect with our entries, and we're making money now, so who cares? That's the point of doing credit spreads, when you know the general vicinity of the price path, and you set a trade that would survive the first worst case scenario. Now we can come back down and retest it and get more in trouble. In fact, I personally will exit mine soon, because I hated how it trades. That you can't get fills, you can't get quotes, it just sucks. IWM, I'm not going to answer much here because I have a special video for these, so we're going to skip it. I'm short the IWM. I would short rallies too, to put it bluntly. JCI, this here is an exit point. Sadly, I can't jump out in timeframes, and TradingView is locked up. I'm scrolling, nothing is happening. Let me change views. Maybe another view would work better. What is this view? Same ticker? Okay, we can do here. JCI. Okay, let's work on this view here. Maybe this works better. Let's change. What's today? 9:29. There we go. There's still a lag here too. This here is not an obvious point of entry for JCI. If you look left, you're going into a prior fail. So it's a good trend. It's a good breakout. So you could get to 90, but just buy the dip inside of that. If you're long, you can stay long and trim however you want. Okay, so that's JCI. Let's go down one. JP Morgan, I would short. I did not reshort. We've played with it quite a few times. We shorted it successfully. Did I short it? Did I reshort it? I don't know. Anyway, if it jumps up to 215, I would re-engage short. The short I would do with it is a bear call spread, debit put spread, or sold call bought put. Depends on your risk appetite. And no, I'm not shorting its fundamentals, but I know that it's going into earnings, so I'm not going to do anything until the earnings reaction. KMX, I wouldn't touch this stock, and if somebody bought the dip on KMX, good job. This here is not an obvious entry point. So now there's a chance they want to revisit 70 just to get this out of their system. Look left, it bounced exactly where it needs to. So here's the statement off of this. If for whatever reason, and I honestly say that, for whatever reason, you lose 68, good Lord. This thing is going probably to 54. Okay. That is not a forecast, so don't buy puts or don't short it. Say Nick said it's going to 54. If it loses this line, which is very, very, very hard to lose, the first sign would be losing 73, 74. Warning. Because losing this target is below that. You understand this? So let me put it. I don't trade this stock, nor will I ever. It seems like it's a GME kind of stock. Okay, so this one is warning number 1. And the target, if you lose that one, let's say is this much. It's actually more, but let's go with this much. Look at where it's at. The target of losing this would trigger that. And if you take these two and you copy paste, whoops. You see the chain of events that can happen. This is if. That's a warning. Don't buy puts for that. Okay. What you should know also that this is a catalyst for the moon, and this is a level of resistance zone here. So this should give you enough to actively trade it. Okay. Kroger, one of those really wild charts that trades like Tesla, and you look at the P&L, that couldn't be anything further from the truth. So up here, not an obvious point of entry. I don't understand how it trades this wildly. Just you should know that something else is in play. Technically, a chart that looks like this, if you go above 59, you're going to 70. What are the odds of this one? I'd bet against it. So the way I would trade this, if it goes above 59 and it bursts, I would short it on the burst. That's how I would do it. If I'm long, I would trim and leave runners on. Lily, I don't trade Lily. You know me. Technically, it needs to get back to 920. Otherwise, it's going to 820. Those two blue are still there. If you don't come back to 920, you're going there. See, those two blue arrows did not play out immediately, but they're still there. In fact, 820 is doable, if not 700, but over months and months and months. The P&L says it shouldn't go there unless the markets are crashing. So if we have a correction in the market, you're going to get much better prices on Lily. So don't be a hero, Billy. Get it? Whoa, look at what I just did. You know, a reference to the 90s or 80s. Billy hit, jeez, different, next level, Nick. That's next level dad joke. LMT, talk about next level. Holy moly. So we took a short on LMT. It went red, went green, and now it's back to red. I'm still in it. It's a put spread. It was one of two. I like the company fundamentals, but it's rallying on war. So here's my... If you tell me this is a war company, and it's not, it has a war element, but it is a war company. That's how the market treats it. That's how it is. And the market doesn't care about the war. I think those should be mutually exclusive. So one of these two is going to end. We either have a war or we don't have a war. In which case, if we have a war, this one should drop. And if we don't have a war, this one should drop. You see the concept? It's not like the fundamentals are getting so much better now. So it's trading on something from the future. That's a call from Lebanon I have to dismiss. So I'll call them after. So that's my problem with it. If it's, just think about the logic. If it's running on war and we don't have a war and the market is correct about assuming that there's no war coming, then okay, it's overblown. And if we actually have a war, the market will care and all stocks will fall, including this one. Lamb Research, buy the dip moment on Lamb. I haven't seen a dip in so long. Okay. Support zone extends from 815 through 775. If you have a big enough account that wants to buy shares, you should have a big enough account to make money like gold by selling puts every week until you get assigned, or every month. It depends on how active you are, and you don't even need to be long here. So I would suggest that if you were going to buy 100 shares or more, I would look into a stock replacement strategy. We discuss those in the live all day, every day. Join us if you're not a member. Lulu, we went long on dips and I would be out. It's going into a prior fail. It looks like a breakout. Yes, you look left, there's a mountain of sellers waiting. So yeah, it could get to 295. Okay, so 1 second for a second. I need to message them here. Message, can't talk right now. I'll call you back. Okay. I love it. They have pre-packaged responses. 290 to 297, there should be a bunch of sellers. Buy the dip. In fact, it may come down to 270. So I said to sell puts or put spreads to go long, or if somebody bought calls, I would be out. As a trade, as an investment, you know, Lulu is going to be fine. It's almost like Apple. Its clients think it's the best and they don't mind overpaying. So, okay. They're going through a major change in their booking process, so be careful. I don't like airlines to get all together, and I like this one the least. I used to fly it almost exclusively decades ago, and then now I don't even look for it. In fact, I exclude it from my searches. That's how much I don't like it anymore. And now they're changing the way that you board completely. And some people, the only reason they're on it is for that. Like you can sit together where other airlines are hard to sit together. And now they're going by way of the other airlines. And I think they're going to make you pay for bags and all of this. Not for me. Base below 26 is solid. If you got long below 28, 27, you're golden. Don't look at the chart. You're in it for an investment. Don't look at the chart. As a chart, this is not an obvious entry point. Solid support below 28. So if you're selling puts below 28, solid. LVS, not an obvious point of entry. So anybody that's coming to me with a ticker like this, I would like to ask you here, what are you asking me? Are you asking me, can I go long? I'll say no, because you should have gone long below 42 or 40 or 39. No, you don't go long here. Are you looking to short? You could. It's going into a resistance zone, but 17 days from now we'll report earnings, and that's just, for me, I wouldn't touch it. You say, but Nick, it looks good. Okay, you missed it. Admit it and move on. Put an alert at 45. Wake me up when it goes back to, oh, it'll never be there. Look how high it is. It was there 2 days ago. 3 days ago, it was 42. Now you want to buy it 20% higher. It just doesn't make sense. It's going into a prior fail. I wouldn't touch it up here. Meta, I wouldn't touch it up here. Definitely don't short it. This company has an unbelievable P&L now. My personal feeling is that's a scam. I have proof. We've discussed them many times. A scam from a retail perspective. Everything I bought off of Meta was a scam. I mean everything. Nothing was what it's advertised, and if it came, it's either the wrong thing, something completely junk. And as an advertiser, I'm getting scammed. I know it. I have proof. Too long to explain, but it's proof. The advertisers are getting scammed. It's a matter of time before they get caught. Having said that, their P&L is amazing. And on top of it, they're telling us they're building this whole new area, the metaverse. Where is it? But anyway, they're building it, and that's going to bring new income? Holy crap. How can you short that? Stay away from it. Buy the dip with confidence. MGM. So Caesars and MGM are doing well. This one, the breakout was from here. Let's give it, you can have $4 or $3. So you could be headed to 41. I think this red box, look how accurate it was here. I didn't draw it before. I drew this box before this rally, but I didn't take it off. It's based on these candles, these 5 candles. Look how accurate it was, and they're coming into it. So what am I saying? If it fails here and holds and come back and take that out, it probably goes to 44. So if I'm not long, I could get long, but I need to leave room for a dip. 3M. Last thing I remember is we bought the dip at some point. I wouldn't touch it here. Why is this P&L giving this chart? Look at the P&L shrinking, for fudge's sake. It's shrinking and the losses are mounting and it's doing this. Can you explain it? No, it's the same as Coke and Pepsi and all of these staples that are going through the roof. This here is most definitely not an obvious point of entry. In fact, this is shortable, but I wouldn't touch it. It's not very liquid. So we went long on a dip. I remember this one in the 90s, and we got in trouble like if we didn't time it right. And this here is not for me. What are you asking? Permission to book profits? Permission granted. Molina. I've heard the name. I don't remember the ticker. Okay. Can't tell you anything. You have sellers above, buyers below. If you take out 322, lose 322, you're going to 295. If you take out 365, you're going to 392. Maybe. You're stuck in the middle. There's no decision right here from the chart. Merck, you better not lose 110.5. Why? Because the target of that is like 94. Mind you, you have a ton of support around 105. So the best entry would be as close to 105 as possible. Having said that, for the last 2 months, you have solid floor at 111. You shouldn't lose it. Just like you couldn't take out 120, I don't think, without a headline. So these are the stocks that do get headlines. Every day is like an earnings report potential. FDA this and FDA that. So you're stuck. 120, 111. 120, 111. You get long towards 111, you get out towards 120. And it's shortable if it gets to 123. It's a sell. It's an exit. We bought the dip in this one here. There's nothing to be done. You're stuck in inside of the, like, look left. There's a bunch of action right around these ticks. So 66 or lower, super strong support. 78 or higher, strong resistance. If you take out 77, maybe you have enough energy to go to 86, and that would be an exit point. As an investment for the long term, if you bought the dip with me, there's nothing to do. This was Marvell, not Marvel Comics. Marvell, tech company, I believe. Microsoft is always a buy the dip stock. Best company on the planet right now. The largest company that has the best, like, the choice between owning Microsoft forever or Apple forever. I wouldn't even blink. I wouldn't even think about it. I wouldn't look at a chart. Microsoft. Forget Apple. For as long as Tim Cook is in charge of Apple, forget Apple. This guy is killing the company a little bit at a time. This company is firing on all cylinders. Buy the dip. These blue lines are not a forecast. It's a warning. If we drop below 426, we come down to the 418s. But that's not going to happen all by itself. Now the problem is around 436. If we get there, it's an exit spot for short-term traders. Okay? Sellers are above 440. All these wicks, but that's where the opportunity is, and it's lagging the S&P. The S&P is breaking records, and this one isn't. Something wrong with that. We can talk about it Sunday night, tonight. Micron, finally, so history lesson with me and Micron. I hated it up here, and I don't hate it down here. In fact, I said, show me, don't tell me. Everybody told me why Micron deserves to be up here. I said, you're wrong. And everybody now is showing me the reports in Micron, and I'm saying, yeah, I told you, show me. Now they have 3 good, solid quarters back to back. They've had that before. So if I'm not long Micron, I am not getting long here. You should have bought the dip where it deserved it. Up here, maybe. They're improving, but they're not awesome. So let me say it differently. If Micron is at 140, NVIDIA is higher too, and I like NVIDIA better as a company. So, and they go hand in hand. I don't think there's a future where Micron is rallying without NVIDIA or Microsoft. So why would I want to bet on somebody that's inconsistent? This one is inconsistent. 3 quarters ago, they had negative gross margins. That's pretty scary. So I don't think NVIDIA has the potential for that scenario. So choosing between, so dollars that go in here can easily go in NVIDIA and do as well, if not better, in downturns or in better times. So technically, I wouldn't short it, but I wouldn't jump into it, but just because of the report. For the report, you needed to go long with confidence into support. If you believed it, then you should have gone. If you loved it up here and you didn't go long here, you don't need to go long here. Or actually, you need to revisit the way you trade or invest. If somebody wanting to buy here or was long here and sold here and didn't buy here, I don't know what to say. You need help. I wouldn't touch this company up here. Breakout opportunity, yes. 26 is the target. What is this? Okay. Let's zoom out. It's a great technical breakout opportunity. I shouldn't say that you shouldn't be in it. If you're long for that breakout, kudos. You should know that, look how many times it's failed. What is that, 2 years? 2022? For 2 years, it's been trying to break out. Maybe this one is it. Maybe. I mean, it's $3 to $5 of upside. Make sure you time it right. Look left. Fail, 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 fail. You can consider all of these fails. Fail, 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 fail. Whew. Pivotal spot. Maybe this time it'll do it. Buy the dip for sure. If you're long for the breakout, make sure you're a momentum trader. If you don't know you're a momentum trader, you're probably not. Net. So this is a company that has a solid P&L. Probably is in the right business. Provision of cloud-based services. Of course it is. Buy the dip moment, I think came and left quite a few times. I would build a long position. Check this out, whatever this is here. I'll delete it. Anyway, so this has been a good base. So put an alert down here. if you're not brave to structure a long from now. Those are entry spots. Yeah, something is going on with TradingView, making my job tougher today. All right, so a breakout from 88 could get you to 100. A dip into 77 or lower is an entry opportunity. A dip into 67 or lower, most definitely. Anything inside this wick or lower, it is a good entry opportunity. Here comes the warning. If the market's correct, I have to mention this because we zero focus on what's going on now and we don't consider it a holy shit moment. And what if we wake up and the U.S. actually has troops on the ground of Israel fighting against Iran or whatever? We're pretty close, so it could happen. I don't think the stock market will hold up. They're ignoring the news right now, but I don't think it'll hold up. The breach of 65, which is the heaviest volume, will get you 45. But that's a scenario of a holy crap moment that has not happened. Okay? So let me revisit what could get you here without a headline of war. So I'm going to focus on the S&P. If we lose the lows of September, you know, the drop, the 2-day drop of September, we will probably lose the drop of August, which was more severe. It was a crash in August on 8/5. That was an unbelievable overnight session. If that happens, this one will be below 60. That's my forecast. So don't go all in is what I'm saying. And if you're in, structure some sort of a sold put bought call spread of sorts. If I own shares, I would comfortably sell covered calls. Netflix, great P&L. By the way, yesterday I was trying to watch something and I have access to almost all streaming platforms. I wanted to watch something else. I promise. I couldn't get any other platform to work without crashing. Every platform, including Amazon. Amazon was the worst. The worst. And I just couldn't watch anything. It was like, screw it. I'm going back to Netflix. And I watched all night of Netflix. I just had it in the background doing some things around the house. So it's a solid company with solid technology, and it's the first mover, and I think it still has the advantage. It's a buy to dip. Would I invest in it up here? No. We did an iron condor with it that got tested, but it won. So I wouldn't repeat it because it was set up for last week, 2 weeks ago, and it was by request. So if I would do anything, I would do another iron condor as a trader, but I'm not going to do it. It's too much drama, and I would center it around here. So give it room. But here's the tricky part. It reports earnings soon enough within the next 3 weeks, actually less than 3 weeks, 2.5 weeks. So positioning, they tell me it likes to rally into the earnings. I don't buy into all of that. I would put it on my agenda to buy the dip. So I have alerts. You see my alert? If it falls into 640, 630, I would comfortably sell puts to own it down here. Up here, there's no rush from an investment perspective. I don't know if they meant to say Nova Gold. I'll treat it as such. Everything I said about any other gold company, I'll say here. So gold is breaking records, and this one cannot break a new record for itself just from the picture in itself. So I would say sellers above 460, buyers below 380. NEO, I wouldn't touch it. I believe XP Engineering, so XP EV reports this week. Maybe it moves this one in sympathy. Why? If I were to invest in any EV company, I would only touch Tesla. Only touch Tesla. If you're trading the stock, fine. You're in a breakout, it could get to 8. It starts to be an exit spot from 7 on end. In fact, if you look left, anything above here has been a hard sell. This is a stock I used to sell puts into it at 20 and 18 and 17, and now we're talking $3 and $2. The market is telling you something. Stay away. Nike reports earnings. Everything I tell you now is nonsense. I said it's a blind buy to dip down here. I sent out a note saying there's not enough premium for me to sell puts, but I would have bought half my shares. So I said if you wanted to invest in Nike for the long term, buy half of a position and forget about it. And if you did, you caught an amazing rally and you're going into earnings. And what do? Nothing. You got into it, great, and then maybe it dips back lower again so you can add your second half or another burst of shares. they're selling rallies and making lower lows if you look left. So this is a rally. They're probably going to try to sell it. I think it holds at 75 or 77. So buy the dip below 82.5 or enjoy the fact that you're long already. I would not go long into the earnings. You're taking a lot of gambling. You may make money, but it's a lot of luck. ServiceNow, everything I said about net, I would repeat here. Not a great entry point if you're an investor. I mean, I wouldn't even have it on my to-do list right now. There's nothing you can do with confidence. The confidence entry is below 820. Well, it will never be there. Then buy it. You're asking my opinion. I wouldn't touch it above 820. If I'm a traditional investor, I don't know how to sell puts and buy calls. And that's a massive stock to sell naked puts in. There are tons of strategies that can get you long without any money out of pocket and leaving room for error. Just don't blindly chase. Energy, it was a short. It's a short again on concept, but I think this is a like alternative power, right? Some sort of a nuclear aspect to it that is in the future, not now, if I remember correctly. If that's the case, this whole price action is based on hope. Don't fight it. It came almost to our target and went to the moon. I wouldn't trade this. And if you're an investor, just have the guts to buy the dip next time. Or just buy it blindly, half your position as an investment and forget you own it. And if it falls back down to 62, add the second half and forget you own it forever. So breakout, 86 was a breakout. Target is probably 110. Oh, no, sorry, 100, 102. So yeah, you have a breakout going. If you're a momentum trader, ride it. Just ask yourself what it's going to take that out. NVIDIA, buy the dip, 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 buy the dip. Did I say it enough? One more time, buy the dip. Okay, so I put 2 words and I'll renew those 2 words. Test 1, they passed it. Test 2, they failed it. 118, 126. This week, if you want the bulls to make a new all-time high on the NASDAQ, you want NVIDIA above 128. Okay. That's it. Buy the dip if it comes. Where? Anywhere around 110 or lower. So sell puts to own shares. You can be long right now. NVIDIA long. Everything I said about NVIDIA applies here. NVO, you can be long with a stop. Absolutely. Look at this P&L. Fake. The risk is, this is a diet drug, right? I think so. Ozempic? Yeah. The risk is, it's P&L. It's at risk from government intervention that changes the given. Like right now, as what it is, oh, hell yeah. Long with a stop or long half of a position to add the second half at 102. Yeah, solid. You can get 130 out of it. Just be aware that any given day, headline might take it to 150 or 100. I don't know. On semi, not a long here. It looks like it wants to break out, but it looks like it could have one more dip down towards 72 before it does that. So if it dips and comes back up and pops, that would be great. This is a good P&L, although it's drifting lower, quarter over quarter. Just know that you have sellers above and buyers below. I would be comfortably selling puts. I think it's on my list. If not, I'll add it. Hey, yeah, I would sell puts to own shares in this one for sure, especially on dips. Oracle, I wouldn't touch it. The opposite of on. It's an overachiever. Super solid P&L, but look how boring it is. What the hell? What do you mean to tell me it was that much underpriced? No way this is a long up here. No way. So expectations might be too big. So not for me. Shortable, but not. I wouldn't want to be long. Oxy. Okay, so I told you so. No. It's a long here from an investment perspective. If you believe in it, you're long here. Technically speaking, you could drift lower because the rally was super bad. So here's what I would also say. This whole thing was wrong. So assume that it's not here and that the bottom was here. So it's approaching a bottom. So if I sell puts inside of 42, I can do it below 45. I can do it with confidence that it's close to an all-time low, not an all-time low. Like, this is the freaking pandemic. So this is the real bottom. That's how I would treat this. Selling puts with confidence, knowing that rallies are not going to work. So if it rallies to 57.5, it's going to face a lot of sellers. So this way you wouldn't care if it does rally. You want your shares lower, you may get them. But Nick, I may miss out on the upside. There are things you can do to capture the upside. Come into the live. 24 is your test, and you have solid support to do it. I don't know what this does. Pan American Silver. Oh, okay. I wouldn't touch it. Why? Silver is lagging gold. Now it's trying to catch up, and this one is still not breaking out of its own self. Let me see here. So silver is behaving better than it is behaving to its own self to a degree. So, I wouldn't get out of it. I wouldn't start longs here. And if I did, I would make sure I'd do it in a way that it doesn't need a rally immediately to make money, like not calls. If you're investing in shares, I think you should grow more confidence in going long on bad stints. Anybody that don't get me started. Anybody that gets brave on gold, silver, and crypto when it's recovered should take the George Costanza approach. Whenever you feel something, do the opposite. I guarantee you better results. It's guaranteed. It's guaranteed to work better than just chasing your feelings. Anybody now is interested in gold, you should do the opposite. You should start finding a way to go long when everybody else is not interested in gold, which is not here. Silver is the same conversation. So as an investor, put an alert and buy it below 16 or 17. You would do better. Palladium. Okay, I don't know anything about palladium. So it's falling. This stock is falling into long-term support. So anywhere between here and 86, there's a lot of buyers. And anywhere above 100, there are a lot of sellers. Look left. So yeah, you can start longs as it's falling into 88. And this brings us to video 3. Whew. All right, let's try to power through this one. Video 3 of 3 on 9/29. We start with Paramount. Like I said, nothing works but Netflix. Paramount was a buy down here. I think I sent out a note and saying, I'm not sure what's going on. It's a new spinoff and all of this, but I think it's a buy. I don't know what's going on with that $4 billion. Did they buy somebody? So figure out. Investment-wise, I would buy the dip as it approaches 10.40, 10.30, or sell puts to get shares. Owning shares is iffy because for the short term, you have all these sellers waiting to transact. And make sure to know what the hell happened, that you have a net income of $5 billion negative. I'm sure it's some sort of a one-time thing, but find out what it is. PDD, same as gold. If you didn't buy the dip down at 100, you have no business buying it up here. I'm telling you right off the bat, you missed it. Come back to me later. When? I don't know. Maybe closer to 120, 116. Nick, it'll never be there. Then you missed it. Move on. There are other stocks to trade. That's what I would tell myself. I'm not being rude. That's what I would tell myself. Pfizer, you could buy the dip. It could see 727. It could go to 31. So whatever you do, make it a partial position. There's no need to go long. There's no need to go short. You have buyers below, sellers above. Taking out 30.2 might get you 31.8. And that's another conversation for another opportunity. Palantir, not for me. I loved it when it was 12. I loved it when it was 7. I shared both entries. If you're buying it here, just like gold, put an alert for yourself. I said buy the low 20s the last time somebody asked me, and here we are. Holy moly. Yeah. So I don't know what to say to this market. I don't want to short it. It's an amazing company, but holy crap, do I want to short it? But not for me. You missed it. Maybe around 28. Now it's an entry. 29. Definitely below 30. For me, for my own portfolio, I wouldn't touch it above 30. And if I never ever buy it again, that's fine. I know the markets will crash and I'll get a better entry point. There are thousands of stocks I can trade. Not for me. I don't know what this is. Powell Industries. Looks like a breakout. Good P&L. Quarterly basis. annual basis. What does it do? Custom-based products and systems include integrated power. Okay, power. If you're looking for a dip to buy anything into 190, it's in open air right now. Shorter term, you got the wicks from last week versus the wicks from last week. You got 211 versus 224. That's the short-term trader comment. PayPal, not for me. Shortable, maybe. We went long on the dip. We're not long up here. Shortable will just stop. This stock will see 72. I can almost guarantee it. When, I don't know, but we'll see 72. If you want an entry at 72, you can wait. It could go to 86 before then, but it's not for me up here. Look left. Fail, 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 fail. During the 2022 correction, it sold off like hotcakes. And it was like out of business type of a sale. And they haven't recovered those levels. Look left. I have a sneaky suspicion it's rallying with Bitcoin. So let's see what it does if Bitcoin corrects. Qualcomm, buy the dip with confidence. Buy the dip with confidence. So I provide us this dome, and it did it already. This dome played out. Okay, I should shorten it, like if I were to move it. This dome played out. Whoopsies. This dome played out already, and it's playing out again, so that's why I left it. What am I saying? As long as it's below 185, there's a risk of retesting support. And the same conversation with the market crash. This will be below 140 with a market crash all by its own. No, the solid floor it placed at 152 is pretty solid, to the point where we sold puts with confidence. Every dip we sell puts with confidence. This company is the future. Mobile technology, mobile computing is based on their chips, which is tied to ARM. That's why I said the companies. I said NVIDIA, ARM, this one are a no-brainer. Regeneron, right? No. Who is this? Repligen? I don't know what that company is. Okay. Stuck in the middle of a range. You have sellers above 162 and buyers below 132. That's your range. If you lose 135, you probably will get 125. Restoration Hardware, not for me. Look left, prior fail, prior fail. I don't do that. So where do you get long? I don't know, 300, 290, 295, 275 if the market crashes. So it's rallying on what? Show me. What did it do? One good quarter after 4 bad ones? Okay, so you got here. What now? If you're not long, you're risking a lot. So make sure you trade it correctly. Rivian, I said sell the rally when it popped. So I've discussed Rivian. Their gross margin, let me check. Last time we checked, they had negative gross margins. And that's how you go out of business while making money. Negative margin. Holy crap. So this is all the sales from their trucks. And their trucks are pretty expensive. This is how much money it cost to get the trucks ready for sale. So the pieces of the truck and the labor that's only involved in putting together the truck, so the assembly delivery, some companies will count that in the labor, in the COGS, is way more than the actual sales of the trucks. And then you have the operational expenses. It's right down the street from me. Sales is not a problem. The fact that it needs to generate cash is the problem. So you can see that here also, cash from operations. So if you see it here, it bleeds $5 billion for this year, last 12 months, $4 billion in cash a year. So the P&L, in order to deliver this P&L with this sales growth, they end up with a negative situation on cash. So what does that mean? It means they need to borrow to continue or dilute their shares. This pop was based on the deal they did with, I don't know, Volvo or BMW, one of those companies, okay? Which means they got a new daddy with money. Like Amazon said no more. Amazon owns like 22 or 25% of it. So they needed another cash machine in order to continue doing what they're doing. That's never a good business reason to buy shares. So I said, anybody long and stuck Rivian, get out. At least with half your shares. If you're investing in Rivian for the long term, that's fine. Entering around 10, that's fine. Entering all in, that's not fine. I would take a starter position and forget about it. And if it goes down to 7 or 6 or 5, I would double it and forget about it. They make good trucks. They sell every truck they make. It's in my neighborhood. I've even seen a truck that is not on sale yet. They have something small, like the Maverick, the Ford Maverick. I don't know what that is, but I've seen it driving around. It looks like a Rivian, but it's no tags on it. It's like covered up one of these production things. Roku, not an obvious entry point. It's trying to fill up the gap, but to be honest, I think the resistance starts at 82, not the full gap. So if I enjoyed a rally and my position now is much better, I would be out. If I'm looking to go long, I would buy the dip anywhere below 68 or 9. Sam Adams, is that it? Yeah. Whew, brutal. Golly. Okay. I don't know what they're doing here. So just use this candle. That's all there is to it. Put a box around this candle and let this be your sandbox. Entries and exit. How about you say it this way? These are the perfect entry and exits. So since we're not perfect people, put another box that is at like 1/3 of the other one. Okay? And make it thinner. What does that mean? That's your trader boxes. Actually, I would make this one lower. So I would exit longs here and maybe start shorts, and I would buy the dip here. So this is being perfect. Nobody's perfect. So time your entries and exits based on this smaller box. Starbucks, it is not a long here. Most definitely not a long. It's rallying on the fact that one CEO came and joined the company. So the bummer part about Starbucks is it's got a great business, pretty consistent business, ideal business. Nobody's going to quit drinking coffee, and their coffee is overpriced, but not by a lot, folks. I travel a lot, and if I buy coffee on the road, Starbucks is as expensive as everybody else, and it has better coffee, so why not go to Starbucks? But people that complain that, okay, so the guy that came from Chipotle, I think his asset is that he can put throughput, right? So he fixes the throughput in the stores. Well, everybody complains that Starbucks has a problem. And to me, it's not a problem. Their problem is long lines. That's good business. So if this guy can make the long lines go through faster, then they would do better. But I think that takes away from nobody wants like Chipotle in and out of Starbucks. They enjoy the whole process. At least the people I know. They enjoy seeing the same people every day, smelling the smells, waiting in line. They enjoy the attention, and they have a special relationship with the drink. It's a whole experience. I don't think you can make that experience faster. So it's overblown, the impact he will have on the bottom line. That's my assessment. It's not an obvious entry point. You have sellers at 105, 106. Buy the dip. Where? Anywhere below 87. SE, everything I said about PayPal, I say here. No way on earth I'm going along this company at this level. Good business. It's a three-headed company. It's a breakout. It could go to 150. It's going to have to do it without me. In fact, it could go to 170. So if you're long and you're a momentum trader, kudos on you. You can stay long, but you should make sure to scalp. Okay, if you look left, I think there's a lot of sellers scattered, but it's a wide zone. We were long this one during the 2022 correction, and it would not freaking stop falling. We sold puts, I think, in the 50s, and we just had to do a lot of dances to get out of them with profits. Square, PayPal, and this one, and Roku, maybe not so much Roku, but those three I remember distinctly. All of them worked out well, but they were a hassle on the way down. So I took it off my trading list. Nope, not touching it. Shopify was the other one. Yes, this was it. Everything I said about SE, everything I said about PayPal, I'm saying here. Awesome recovery for a great company. This one is one of my least favorite, actually, P&L wise, but not an obvious entry point here. If you're looking to go long now, I'm going to challenge you to examine your feelings. Your feelings are getting in the way of profits. You needed to go long at 55 or 50 or 56 or 60 or 62 or 65, not at 80. You're going long where it's failed before. If this stock goes above 91 or 2, it can go to 120. But if you didn't buy it on the dip, chances are you're not that kind of momentum buyer. It's not a bad investment for the long term. Just take less than half of a position if you're an investor. If you're a trader, you're trading it wrong. You're buying the rally. Buy the breakout. buy the next dip into 74 if you're an investment trader. Silver, I've already tackled the situation of silver. It's trying to catch up to gold. I'm going to put GLD here for a second to show you why silver is trying to catch up to gold. They tend to trade together. If you went long the dip into the neckline, you did right. I believe it also had some seasonal advantages to go long. Thank you, Raghu, for that idea. But now you're going into a prior fail. Yes, it could get to 31, but it could also come down to 26.5 just as well. SMCI, so we bought the dip and I closed it the very next day, if not the same day. So I did not like SMCI. I did not want to buy the dip, but the second dip I did because somebody asked. And I said, here's how I would go long, and I shared it. The risk was down here. So even if they were going to get penalized, blah, 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 I would have gotten in at a special good, and at an especially good position. So my risk was not really risk. It was a chicken way of risking something, but I made $180 out of thin air per contract, just out of thin air because people panicked. Now, it may not turn out to be good for the company, but here's how I would say it. If SMCI is higher as an investment in the future, NVIDIA would be higher. However, I do admit that there's a lot more upside in this one without anything happening in NVIDIA. In other words, there's so much negative pull that if you eliminate some of the negative pull down, this thing could be at 640 in no time, while NVIDIA still messes around with the current resistance it has at 126. So I see the attractiveness. If you bought the dip, good job. Just manage your risk accordingly, and you should know that you should use something that is not time sensitive, either shares outright or aggressive diagonals. SMH, not an obvious entry point. You look left, it's failed here before, and failures above. So this purple thing is not out of the question. It still works up here. So I'll leave it down here so I don't backfill my trades. But this giant head and shoulders is still there. So what kind of scenario is this? That's the war scenario, that where the market crashes 20%. This one could be below 165. But we haven't even started doing that. We fall for 2 days and we buy it like, oh my gosh, we just had a 30% correction. Whenever that ends, this thing could be lower. So what am I saying? It is a great trading device, but it is not a great investment entry point. It's a nope. So if you want to invest for the long term, and let's say I inherited $1 million and I wanted to deploy it, I wouldn't even deploy 10% of my position of SMH, maybe tops 10, 12%. Snowflake, it's a good starter position if you believed in it before. I wouldn't add to current position, and if I was going long this, I would take 50% of my position tops, and then I will add the second 50 below 75. Well, it's not going there, then fine. Then you didn't miss out on anything. You're already in there. But what if it does? Then you have a great entry point for the long term. I don't like the fact that I think Buffett was in it and he's out completely. So I'm not sure what kind of due diligence he did, but you lose that talking point. It's not a great thing. Technically, I see it up at 122. So going long in this zone, this whole zone from here to 108 is fine. Spotify, not fine up here. This company is amazing. But look left. It wasn't so amazing starting longs here. Look how far away from the moving averages it is. Better entry spots, anything below 300, anything below 260 is a bargain. Everything below 300 is okay. Everything below 260 is a bargain. So buy the dip in Spotify. If you're looking at it and you go, God, I wanted to buy it at 250 and I missed it. Let me go in here. Ooh, okay. No, that's not what you say. You put an alert. Okay, wake me up when it goes to here. And wake me up when it goes to here. And yes, wake me up when it goes to here, because it might go to here. In fact, I can almost guarantee you it coming back to 200 over the next year or so. AT&T, it's breaking out. I use the word guarantee. I say almost. No, nothing is a guarantee. If it is, they would have no rewards to it. A breakout from 19, to be honest. This is a target zone from that breakout. But along the way, they also initiated another breakout. This is another overachieving stock. I don't respect it as much as it's delivering here. But it's going into, this is the middle. How about I do this? Let me show you this box I'm going to draw. I think this is the playground. And this is a giant area of sellers and we're approaching the middle of it. So not a great entry point. Buy the dip closer to 20. Tesla, okay, so that's somebody that's misspelled Tesla. Can you please be careful with your statements on that? All right, so you're lucky that there is a Tesla ticker. Not an obvious entry point. Not an obvious entry point. Buy the dip to 230, if not 215. If you take out 270, you're going to 320. You should know that. Don't short it. It's just not an obvious entry point. Okay, so now I have to do Tesla twice because no, I'm not going to do it. It's on the list. Toyota Motors, yeah, I don't touch car companies. They're idiots. They don't know how to run a business. And Toyota is the least idiot of them because they didn't buy into the EV revolution. I think they have it right. Hybrid model is what should be. And I don't know what they have in their back pocket. I feel like they have something in their back pocket. But they have a problem. They have an image problem. I don't know how it's going to translate. They're under attack from social media making fun of how they switched a lot of V8s to V6s. I think the reason people bought Tundras, I'm almost certain that the Tundra is also a V6 now. That's like sacrilege. I would never buy a V6 Tundra. Never. Never. I would buy a small 4-cylinder Maverick than a V6 Tundra. Anyway, so let's hope that doesn't take off in the US. But it is a global company. It's a respectable company. EVs would not exist if it wasn't for Toyota paving the road with their funny-looking hybrid, the Prius. So here are 2 lines you should pay attention to if you're a Toyota trader. Actually, I'll give you 3 lines. Anything below here is okay to go long. Anything here is tough. Anything here is exit. TSCO. Not an obvious entry point. It's going into a prior fail. It looks like a breakout opportunity and it could get to 308 from it. Buy the dip for it. So just repeat the process. Okay, so from here to here, right? They bought the dip. Buy the next dip. We already did Tesla. TXNM. Not an obvious entry point. You see how many times I've said that? Okay. It's going into a prior sale. The whole zone from here to 45, 45 and a half is the prior. So buy the dip. They have been buying the dip. Just repeat the process. United Airlines. I have a feeling I'm going to say not for me. Changing my words up a little bit. Looks like a breakout. No way am I going long an airline ever, especially not into a prior fail. So I would go long if it falls back into 36 or 40. I would not touch it going into 64. You're saying, Nick, the whole thing, it can go to 74. Yeah, it could. So if you're a momentum trader, just trade it. You don't need my permission for it. You need to know how to trade it. Pop into the live room. I'll give you a strategy. But to go long calls or shares 2 weeks into the earnings, definitely not something I would do. And also, this is happening while prices are rising, or is oil falling? I mean, it could be that oil is falling. Technically speaking, not for me. Strong move. I don't understand it. Their business is terrible. I fly every month, and I fly multiple airlines now. My favorite is JetBlue because it really only JetBlue has real first class, like a first class that you can recline into a bed. American, Delta, I just flew those 2 in the last 2 months, both first class. Their first class now is what we used to pay for coach in the olden days, plus the drink. That's it. Like, it's a nice, comfortable seat, but there's nothing first class about it. And in fact, one of my seats was broken. So there you go. You pay up and you get a broken seat. I could call and complain about it, but then you would run into the beautiful business at the back end of the airlines, which is not worth the money. So anyway, business-wise, they're lucky to have a rally like this when NVIDIA can't even catch a bid, so not for me. Uber, be careful. So Uber, the way I treat Uber is like Amazon. They want to be an aggregator of business. So it's not like it's a company that transports people. They have multiple businesses they're trying to like breed into being a huge revenue center. So a breach of 74 or 73 is a good breakout that should get them to 90, 92. So if you're trading that breakout, kudos, yes, that could happen. And you can also accomplish it by buying the dip. If the market does not correct, this one has a good momentum going on. So I would be looking to buy the dip into 74.03 in order to get the curl back up and finish the job. Right now, it's in an area where it's seen some failures before, so be careful with that. Universal Health Services. Talk about a generic name. Yeah, I don't invest in these companies. UNH is one, Humana is another, but that's about it. Great breakout. This looks like a target zone or two, more so than a starting point. Yep, it's actually more than the delivered, so I would be looking to exit up here. Speaking of oil, USO. Why is the USO going like this when oil isn't? I don't think they're going the same way. Maybe they are. Okay. This chart looks like it's falling into support, whatever it is. If USO loses 66.2, let's round it to 66, it goes to 58. And if it loses 58, it goes to 48. Can you imagine oil under 50? What? Anyway, those are the technicals. Meanwhile, it has support here, and it should try to rally back to 76. Let's look up close. It's a lot harder when you zoom in to make these things happen, right? So solid buyer into 66. Solid seller at 74. But it looks like it's just as easy to break out of 74 and get to 78 than it is to lose 66 and get to the low 60s. So you're stuck in the middle of the range. Making a bet which way it goes, maybe you buy Strangle. Valley, not an obvious entry point. It's going back into the neckline it lost. So it had a disaster at 12, and now it's running back into 12. So maybe it gets to 13. Just buy the dip if it happens. You missed a great entry point on the buy the dip situation. I know a couple of people reach out. VF Corp, definitely not for me. It looks like it wants to break out of 21. Let's say if it gets to 22, it could get to 30. But look at the P&L, shrinking quarter over quarter. Be careful. Study the business to make good decisions there. Okay. VGO. I don't know this one. Wow. Where do you get these? Where do you get these stickers? Infrared detectors. Detecting environmental hazards disease. I don't know what that is. It's inside of a base, so you can go long with a stop as an investor. Verco. Where are these tickers coming from? Okay, $12 is a good pivot. That's your base. Anything close to 13 or lower is a good starting point based on this chart in front of me. I honestly don't know what's going on there. Vertiv, at least I've heard of it. It's going into a prior fail. It's beating this resistance. So now this R is really now an S over here. I would like it better below 94. How about that? I would like it better below 94. Vistra. Geez, the letter V's. Stocks in the letter V's. There's nothing I would invest in. Maybe Verizon as an income strategy, but not now. Okay, breakout in motion from 95. You could say it's another breakout from 107. So the bulls have momentum. I would not start longs here. Verizon, it's inside the letter R, not for me. Flat top, this couldn't be more boring of a P&L, but for some reason it's going through the roof. It might have something to do with the Fed. The Fed is manipulating our business, our lives every day. I wish they would just freaking stop. Stop doing anything, Powell. Just don't do anything. Let risk play out where it needs to play out. He's not listening to this video, I bet you. So I can cuss him if I want to. I wouldn't ever consider Verizon at this level. Nick has got a great revenue for fixed income. You know what also has a great revenue? A 1-month loan to the government, which is considered a risk-free statement. Pays just as much as this guy. Why on earth would you put your money at risk at these levels from this company? Good company to buy on a dip. Look at it. Why didn't you buy it at 30 if you're considering it at 44 now? Not for me. I did say buy it a couple of times when it dipped in the low 30s. You remember that? Yeah. Up here, never. I would never touch this company. Same comments as CVS. Look at the P&L and look at the price action. What the hell? What do they know? What does Wall Street know? No, not for me. If you're stuck in it, buy shares for the long term and just say, okay, it's going to survive for the long term. But first of all, with a name like this, seriously? Okay. I have stories about Walgreens before they became WBA. So I would never touch this. If you go long, you're just hoping, and I don't have any input for you. Now, on the other hand, this one I would buy for the long term. Why is it? Okay. I would buy for the long term as an investment, but a blind investment. So let's say I decide, okay, I want to put $2,000 into the stock, and that's not a recommendation. I will buy 1,000 and forget about it. And then if it gets cut in half or it falls down to $5, I would add the other 1,000 and forget about it. You could go long here. Just make sure you take no more than half. Wolf, I don't trade. Every time I have a foolproof strategy, it bites me. So I don't trade it at all. Plus, the options are super illiquid. On paper, I mean, I don't like P&Ls that are like this. Let's see, is this a P&L here? Yeah. Look at this. Quarters, flat top, and the expenses, like the losses are increasing. It reminds me of Unity. It's just not for me. Technically speaking, okay, it's a descending wedge, and descending wedges may often break out like this, but you know, do your due diligence. Is this an all-time low? Almost, for what it's worth. Okay, like there's better money to be spent somewhere else. Okay, I don't even need to make any comments. You're too late. Not long here. If you wanted to short, at your own risk. What is going on with casinos? Was there a new law passed that allows them to rake in the profits more? And hotels? Wow. Is there? Okay, Macau. This must be a China tie-in. Yes. Gint, I beat you to it. You probably were typing as I was saying it. Macau. Okay, so most definitely avoid. Or if you wanted to go along the casino, short the FXI. Okay, what are we doing here? It looks like we nailed it. Who is this? XBI. Yeah, we did. So the rally failed. Not perfectly, but it failed, and now they've dropped. So short-term base, yes, if you're looking to buy the dip for the short term, but long-term, I think it can go lower. So if you lose 96-ish, you're finishing the job with target 2, but it's not necessary. And now you're stuck between a nice, good buyer here and then solid seller there. So you're stuck between 101 and 96. Energy, I used to trade it very, very actively, and I stepped away from it because this ticker, folks, is 45% of it is 2 companies, Exxon, Chevron. I shorted Exxon manually and won. And there's a weird situation between Exxon and Chevron now. Chevron is buying a company and Exxon isn't, so Exxon is doing better. I wouldn't own either. If you're trading this stock, you should know that you have solid support below 84. That's why they bounced really hard. The question now is, would they want to lose it and go to 81? And if they do, then you have to worry about 76. But until then, you have a solid buyer below. If you just went long, okay. Just the same, you have a solid seller above 90. So you're still stuck inside these 2 boxes, like I said. Look at that support zone and likely target. Those comments must have been from up here. And look at where they are. Ta-da! And this comment of sellers, now we change it to buyers, and look how well it's been. So we will say support zone below here. Again, sellers, that's a while back. Look, they ended up being support zone like this one. And if I move this one to here, definitely I would even say long. Like I would go long down here. XLF, I wouldn't touch it. It's going into earnings, and often enough, banks don't inspire buy me after the earnings type of trade. And this was close enough to a target. So maybe if they pop on earnings, I would short. I believe I may be short a little bit. So somebody asked me, I'm still in the short that you sent out on XLF and XLV. Okay, so can you guys please read the statements when I send them out? When I say I bought this put or bought that put, I usually say I would consider stopping out at 35% loss. And if it's 60% and you're still in it, why? Okay. Sometimes I say I wouldn't stop out at 35% if I only take half of a position and I decide to add half and then stop out. So if that's the case, you need to reach out to me in the live. I'm available to you all day, every day in the live. Members, all day I'm speaking like this. Can you just pop in there instead of taking my attention for 30 seconds on Sunday? It takes 5 minutes to get a full-blown answer with step-by-step things to do. Just pop in there. So XLF, I think that 45 is a pretty big pivot point, and that's what they're doing right now. I am short somehow, one way or another. I don't remember exactly how, but I am short, and I would look to short pops as well. I'm not all in. Okay, members, you know what that is during the live. That's the bull that we have right now. We went to AI and we said, give us a picture of a cocaine bull. If you don't know what that is, go watch a movie called Cocaine Bear, and you know what that is. So this bull is on cocaine and doesn't want to listen. This was my version, and this one was Rusty's version. His version is better. Okay. Well, like it's a zombie bull, but still, who is this now? XLI. Okay, I'm short the XLI. So this is on the back of companies like Caterpillar. The idea that when the Fed cuts rates, it inspires global growth. I think this time the Fed is cutting rate to avoid a disaster. So I don't think they expect that the rate cuts are going to spruce up more Caterpillar sales, for example. So I'm short. I would not be long the XLI, and I would be in a short position somehow. I don't know what that is. We will skip it. Z. So this was a trade idea from a friend, and he said it might be a buyout candidate. And we initiated a position way above this level. I don't remember exactly where. Sold puts to own shares or buy half of a position of shares. Either way, it was half of a position. And I said I would add to it if it collapses. So if somebody listened to the write-up, they would have added to it, and now they're much better situation. So if it was an investment via shares, then there's nothing to do if you didn't add. Add the next time they drop and wait for the buyout. If it happens, it does. If it doesn't, it has a good business building. So it will make itself attractive enough to either succeed on its own to be valued more or get bought out. Either way, it was an investment, and if it has a position, and there's nothing to do here. I believe we discussed selling covered calls with a couple of people. Like I remember Jafar, for example, specifically him and I met in person one weekend and we talked about it. And is that the last stock of the day? Yes, it is. Woo! All right, folks, whoever was watching live, thank you for being here. I'm going to rudely cut you off. Consider being a member, simplestocks.com or through Benzinga, whichever one you want. It doesn't matter to me as long as you're in the live room. That's all I want.